but tenants withholding their rent and having the responsibility to put that in like a separate account to pay CRA, it seems like they should be benefiting in some way from that. I feel like there should they should have some leverage over CRA in terms of what they may pay in their personal taxes based on doing work like this, or I don't know. It seems like an extra step that the tenant should not be responsible.
You're listening to the Ottawa Real Estate Podcast with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Hello, and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things real estate in our beautiful nation's capital. My name is Paul Stevenson. I am one of your hosts, and I'm a mortgage agent, a level 2A mortgage agent. And I'm joined, as always, by my esteemed colleagues, David Warren, also a mortgage agent level 2 and owner at Referral Mortgages, and Greg Campbell, partner at the Campbell Merrick Group, realtor, amazing human. Birthday recently.
Birthday today, actually.
Birthday today. Birthday celebration recently.
Mm-hmm.
So how old are you, Greg?
I'm 50.
It's a big one.
And I say that with gratitude, as people right? I'll say that with gratitude and respect. And there, most people would never assume that. I don't assume that either, so that's a good thing. Thank you for not assuming that. Not like it matters regardless. I'm happy to be here, so yeah. But today's an interesting day. We had a pretty wild weekend, so I'm a little you know what it is, you know when you have that elaborate event and then like you're tired 3 days later, like you're fine for the couple of days after the 3 days. This morning I woke up, I'm like, oh, like, yeah, it works. It's like clockwork. It happens. But yeah, it was a lot of fun.
That's called that's a hangover at 50 is what you're
I guess.
explaining.
Next day, I'm fine. You know what I mean? It was sunny. We're out doing stuff all weekend. Kids too, so that was really nice. But yeah, or maybe it's just like I just didn't feel like working today. Maybe
it's a gloomy day.
I'm just like, it's a gloomy day.
You're in long weekend mode.
Yeah,
you just
I really enjoyed this long weekend. I think it was the first time in a while where I just kind of said I'm not doing anything, and I just hung out with Anna and the kids pretty much, and it was awesome. Yeah,
I would say the same. Like it was the first weekend where I didn't have anyone. Like there was no fires to put out, no clients. Emailing urgently, needing something. Like it seemed like everyone just checked out for 3 days. Which never happens, honestly.
And that's what I was hoping for, honestly. Yeah, because Luca went away too, and anyways, I know Vacant was actually working a little bit, but it was great that he was able to pick up the slack and get things done because I was not.
I moved my daughter out on Saturday, which was after 23 years, losing my very first roommate was, mixed emotions, proud, a little sad, but excited for her. They're settled in. Her and two of her friends are both interior designers. So within like 24 hours, her house looked like a magazine, which was just hilarious because if you guys are anything like me, it would take me like, 3 weeks to unpack my garbage bags.
Just don't do it. That was their task. That's amazing.
Yeah. So pretty hilarious to see. Quite a different approach to me moving, How was your weekend, Dave? I saw we were two ships passing in the night yesterday at down.
Yeah, it was good. I spent the weekend up at the cottage, got back yesterday morning early and spent the day basically at parks, and then bumped into you. And actually I saw Luca as well at local and met his new puppy. So, or my son met his new puppy and was very fond of him. But yeah, no, it was a good weekend overall. Like you guys said, great weather. Can't complain.
And what's happening in the market, gentlemen? That's what we're here for. That's what the people want to know.
I think the big news that just came out basically 15 minutes ago is the Canadian inflation rate is down to 2.7%, which is the lowest in 3 years, which is great news, down from 2.9% last month and kind of in line with market expectations. So, it's obviously a good thing. Whether the market is still kind of in flux of whether expecting that June decrease from the Bank of Canada, but they are meeting later today as well. So, just as their regular monthly meeting, not a rate decision that doesn't come until June 5th. But, obviously, though that figure is very good for us as a country from expense standpoint, but also for the proposition of a rate decrease by the Bank of Canada this summer.
Yeah, there was an article that Apple, actually it was the Star put this out, just saying that Canada's annual rate of inflation fell to 2.7% in April. Stats Canada announced Tuesday, but whether the drop was enough for the Bank of Canada to start cutting interest rates is another question. So I posted a graph in our group chat last week, and it was saying that the probability of a Bank of Canada rate cut in June dropped to 45%. And at one point it was as high as 78% or 70%. Yeah. So it seems like every day, like you said, like as news comes out, it goes up and down. I mean, there's a very, very strong chance that in June or July we're going to see the first rate cut. I mean, I can't see it going much further than that. I don't know about you, Dave, but it seems inevitable, especially with this news. Like it seems almost even more probable now that we'll see one in June, but I would say July at the latest, and we've seen the bond rates have come down slightly as well. They're about down, 0.1% from this time last week. So we've seen a few lenders last week actually drop their rates again, which is encouraging, I think, for home buyers. But I'm very interested to see how this all shakes out in the June and July announcements, and what that means for the market as well, how that's going to impact people's, opinions of what's happening.
There's been a bunch of comments that I've been reading online from realtors saying, is summer the new spring? No.
Yeah.
I feel like they think it's going to pop off in July.
Especially, given that June 5th announcement, and then the next is not till late July, but there is no August announcement. So I think to, what you were just saying, Paul, and obviously what the market and economists have been saying, and we kind of talked about ad nauseum a little bit over the last while, is kind of that June announcement. It was the expectation. Obviously, some numbers from the US kind of changed that. Our numbers have been trending downward and have been going in the right direction, but the US hasn't until very recently. So I think that June, July, for sure. And because there's not going to be an announcement in August, and I don't know that they can go past the July timeframe without a policy change. But time will tell. This morning we're down 7 basis points in the bond market, so that's good. Good sign if it continues trending that way for fixed rates. That is. So we'll see. I mean, again, over this next couple of weeks, more data will come out from StatsCan on employment rates and the more microeconomic figures, and then as well the US data, which obviously has a massive impact on us. So
I wanted to follow up on last week's episode because I know we were all laughing at how disoriented it was and we were kind of all over the place, but I actually had multiple people reach out about the funny stories about the credit usage and the amortization, both of which were like, unheard of per se, but just funny conversation starters when you're out in public. Be like, hey, I heard that story you told about this. I had to retell the story in more detail, and it was pretty funny. But yeah, I don't know. Did you guys get any feedback from last episode? I know we were really concerned about how it would be received, but it seems like
I don't know about concerned. I think we just kind of we can always tell when we're discombobulated, and we think it's a ridiculous episode. But anyways,
stories.
I didn't get any comments on it. I do know that show got a ton of views. We're on that big upswing, it seems, right?
So Greg,
and by the way, if you're listening right now, we do understand from our data that comes in that almost 45% of you that are watching are not subscribed. So if you want to subscribe, do that thing. Hit that bell, hit that subscribe bell. Feel so whack saying that. Hit that bell for your notifications about the next tow rep and all that. Yeah. That is YouTuber shit.
Yeah.
Oh, YouTubing. Yeah, I got some stuff. I got some stuff right here. Little summaries of what I was reading. Here's a good one. I don't know if people have heard about, the Canadian that renters are going to be enforced to withhold their landlord's taxes and pay the CRA if their landlord is a non-resident Canada. So here it is. Canadian renters now are enforcers of foreign landlords' tax compliance. The Canadian Revenue Agency now requires Canadian tenants to withhold 25% of their rent if their landlord is a foreign resident and remit it to CRA. The new rule aims to ensure non-resident landlords pay taxes on their rental income. Failure to comply could make tenants liable for unpaid taxes and subject to penalties. Some tenants have faced eviction threats when attempting to withhold rent. It makes sense. Ontario lawmaker Jessica Bell highlights the lack of public registry to confirm landlords' residency status and calls for provincial protection for tenants against such evictions. She also advocates for a registry to easily identify foreign landlords. It's a very interesting concept. We all know that CRA is clamping down in many ways across the country right now, and they're finding other things that they may have lost sight of or not thought of that are happening. And this is definitely one of them. So, I mean, I don't disagree with, what they're trying to get like in the outcome of this, but, tenants withholding their rent and having the responsibility to put that in like a separate account to pay CRA. It seems like they should be benefiting in some way from that. I feel like there should they should have some leverage over CRA in terms of what they may pay in their personal taxes based on doing work like this, or I don't know. It's just, it seems like an extra step that the tenant should not be responsible for.
Yeah, it seems kind of crazy, especially given that a lot of tenants don't actually know who their landlord is because it's a property management company managing that property. So how are they to know where this person resides if they've never spoken to them? They don't ask for a passport or their tax return of their landlord. So I think that's kind of wild. There was a case in April where the CRA went after the tenant after the foreign landlord failed to pay taxes and went after the tenant for collection of those, which is mind-boggling that that's the case. You kind of think as a tenant that you're absolved of any of that sort of thing. So the fact that they have some of these and bringing them up is pretty wild. There definitely needs to be some sort of delineation of what is a tenant's responsibility and a landlord's. I mean, a tenant, it becomes a tenant, so they don't have to worry about the property taxes. They don't have to worry about maintenance. They don't have to worry about, the mortgage. They just worry about their rent. They pay that rent. Part of that, all of that is built in and caked in, and they also don't take advantage of the upside of the equity build or principal pay down of that mortgage. So why are they being hit with that? So, they talk about tenant rights all the time at all levels of government. And this is clearly a failure of those rights.
Yeah, I mean, the property management companies, if that's a thing, then they should be taking care of that, right? They should be the ones withholding any extra taxes. It shouldn't be put onto the tenant for that. Anyways, we'll see what happens with that. I found that it's very interesting, and that could be a lot. That's a lot. There's a lot of people, a lot of properties that are tenant owned or landlord owned.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocats Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal.
On the topic of taxes, which we obviously love here, there was obviously, there was an article this morning about the vacant unit tax and in Ottawa here, which came into effect a couple of years ago, where a gentleman land had been in their family. Grandfather bought it 60 years ago and was used for farming, is currently used for farming. His brother farms it. And there's a derelict farmhouse on it. They use it for storing equipment, but there's no services run to it. It's not used. It doesn't even have a septic, has no electricity, anything like that. And they basically just use it for a hunt camp when needed, but mostly for storing equipment and seed and things like that. But because it has a civic address, it was subject to the vacant unit tax assessment, and there was no category for exemption under this. And so he was audited this year, and they tried hitting him with a vacant unit tax on it, which he's been having to argue. And there's been some dispute of this, and there's of a number of rural properties which fall under Ottawa, because Ottawa is a very expansive geographical area that a lot property owners, they have farms, but they're old farmhouses that aren't being used, but still the city trying to fall under this. So there's been some pushback in some of these more rural Ottawa areas that have been having issues. This gentleman emailed the city, nine people at the city of Ottawa, and finally somebody responding to him to tick off the box for renovations, but warn him that there's no permit or anything like that. So, do so at his own caution. But he did so and got audited, and now he obviously got his representative involved, his counselor, and sent photos of the property to city officials to obviously prove it. But his argument was, if you're trying to slap a tax on something, you should have photos of the property if there's a dispute, just like a red light camera has a photo of the vehicle committing the offense. There should be, he was arguing to the city that somebody should come out and take a photo of this for proof that it is not inhabitable, and he'd be breaking all laws possible if somebody was residing in it, and it's, decades old farmhouse that could never be rented anyways. I thought that was just an interesting story about kind of what hasn't been kind of, when bringing this in, hadn't been consulted on or thought about, kind of similar to that, the tenant and foreign landlord situation, right? Some of these are just implemented without kind of thinking about all the different possibilities of who it's going to affect.
Imagine that.
Imagine that. Imagine that. I got another one here. Canadian capital gains tax hike. Boomers feel the pinch more than the wealthy. Continuing on the taxes here. Mm-hmm. Canadian policymakers are raising the capital gains tax, claiming it targets the wealthy, but Statistics Canada data shows it will impact many more people, often those receiving one-time windfalls like retiring tradespeople. This inclusion rate for capital gains will increase from 50% to 66.7% by mid-year, with a reduced rate for the first 250,000, as we know. This move is timed with the anticipated retirement wave of boomers. Despite claims that it targets only the wealthiest, the tax will affect many middle-class individuals. Entrepreneurs will get a reduced inclusion rate starting in 2025, phased in until 2034, coinciding with many small business retirements. The departure tax will also capture capital gains on assets leaving Canada, impacting immigrants and relocating workers. Misconceptions about the tax targeting speculators are clarified. It will likely hit inherited family properties more. The policy complicates the definition of wealth and home ownership, revealing inconsistencies and potential political motivations. Yeah.
Imagine that. I'll just say that to every article.
We should change the name TOREP, aka Imagine That.
Yeah. The departure tax is interesting because I think when this was announced, that was, a lot of investors were thinking like, oh, we'll just move the money outside of Canada or move outside of Canada themselves. As we know, we have a few friends that are literally doing that. But I think that departure tax, assuming they leave after June, it's still June, right? Is that deadline for
that's still it?
Yeah. So I think, it'll be interesting to see how that shakes out the rest of the year. But the departure tax is very interesting because it is really kind of like holding you hostage a bit through tax. Just tax. Tax.
Well, and where there's definitely been a record number, are some articles that we highlighted a little while ago that there's been a record number of investments leaving the country. Mm-hmm. And so, obviously that plays into it as well. The likelihood of them seeing that trend over the last 12 months, and knowing it's going to hit those from a capital gains perspective, when at least moving it out can be a significant windfall in the short term. Are you seeing, Greg, many conversations of realtors that are, have been having more conversations of people looking to liquidate their rentals or anything like that before any deadline?
I have. It's not as much as I kind of initially thought that I would hear, but it also could be the group of people that I'm speaking with. I'm sure that there's a lot of it going on. I mean, personally, we're working with 2 properties that are concerned about that. So they are selling now, hoping of getting it done and closed before the 25th. I seem to have 2. I seem to have stories of 2. And I don't know why I don't have stories of 1 or 3. Whenever something happens, it hits twice. Like last week, I was talking about that situation where they were, selling one property, put it into their other property so that they could minimize their expenses. But yeah, it's two people with that. I'm sure we're going to hear a lot more of that coming up soon for sure.
Yeah.
Question for you guys.
Yes.
Question. Did you know? Actually, I'll ask you the question since that's how I preface this. How many construction workers do you think there were in Canada last year? Like people working,
great question.
Workers in the construction sector in Canada.
I have no idea.
It was a record number. Any stabs? Any guesses?
I can't. No, I'm not even guessing.
David?
I want to click on this link that you sent to answer this, but
Don't do it. So this is an article by the Financial Post. It says home building lags despite record number of construction workers. This was a CMHC find. So it says housing starts way below the pace needed to reach Ottawa's target. The number of construction workers in Canada hit a record in 2023, but housing production failed to follow suit, falling short of its potential output by a significant margin. The agency's report on housing capacity indicates there were approximately 650,000 workers in the construction sector last year, but housing starts only totaled 240,000, below the 400,000 that could have been built if those workers were used to capacity. The nation's untapped housing production potential was assessed by contrasting actual starts with the industry's maximum capacity. The agency said this methodology akin to economic output This methodology, akin to economic output analysis, evaluates Canada's efficiency in utilizing construction resources to their fullest. The starts figure was well off the pace required to reach the federal government's target of 3.87 million homes by 2031. Mathieu Laberge, CMHC's Senior Vice President of Housing Economics and Insights, noted that despite the record number of construction workers, the industry hasn't seen a proportional increase in construction activity. In the past, according to CMHC, fewer workers were needed per housing unit, suggesting higher productivity levels. To reach Canada's full housing start potential, significant structural changes are also needed. Reaching this full potential will require structural changes that go far beyond the short term, Laberge said. There are adjustments. Wow, another ad. There are adjustments occurring across the country right now that may help us get closer to this goal, such as changes to the regulations and at the municipal level. All this to say, very interesting. I didn't realize there was that's a huge number of people in that industry. And as I said, it's a record number. You think that would result in a record number of homes being built. Would you not? Especially in today's day and age.
What are those guys doing when they're not building?
Mm-hmm.
You know?
So there is kind of that. I think that figure also plays in of who has shifted from new home construction to residential renovations. And so how many of those are in the renovation space and moved out of that construction because there's been a lack of starts in that regard, which is a perfect segue to the fact that the city of Ottawa last week voted for an increase in development charges by 11%.
Oh.
The only city councillor to vote against it of the entire council was our good friend, Matt.
No.
He's informed.
He was the only city councilor that voted against an increase in development charges by 11%, even to the point that the federal housing minister warned that Ottawa could lose a shot at its share of the $6 billion infrastructure fund. But to put that in perspective, the changes approved last Wednesday represent an increase between 11 and 12% inside the green belt in Ottawa. Single and semi-detached houses face development charges of $55,678 per unit, while multiple row and mobile dwellings will be charged $44,337. Outside of the greenbelt, charges will be $63,337 for singles. This is single-family detached. This isn't. This is not a building. These development charges are not for entire buildings. These are for a single family home for a single family. And semi-detached dwellings of $49,738. So we talk about, slow housing starts. We talk about a lack of building, the fact that we are increasing development charges to that. And we talk about affordability. And that's something that Mr. Luloff brought up when addressing, in an article, was quoted as talking about the fact that we're facing affordability issues for housing and first-time home buyers, yet we're increasing development charges by between 11 and 12%, $55,000 a home for a new build. is just the development charges. So for those thinking, else, this is built into your price when you're purchasing a home. When you're talking about a house being expensive, so you think about a $500,000 detached home, you're not getting it. 10%, over 10% of that would be in just the development charge. That is not permit charges. That is not demolition permits. That is not hooking up utilities, cutting the road to hook up sewers. That's not for your architectural engineering, any of that. That's not in there at all. So for those thinking that or wanting housing prices to come down, this is a massive part that a lot of people don't realize. And that 11 to 12 is still, this is not even getting into what even just apartments are for condos, which are in the 20 or going to be over 20,000 per unit now. So, really there needs to be more pushback, I think, and more visibility. Really the only argument by the city was that we have one of the lower price points for development charges than other places in the province.
So what? So
exactly.
Good, great. Continue that.
Yeah.
Oh, well,
so it's over 100.
We're low over here.
for-
We're just going to charge everyone else a little bit more because that's what everyone else is doing. Even do we have to do that? Jeez.
Yeah. And that's, people bring up in Ottawa how expensive Toronto is, and people in Toronto bring up how expensive houses are in Toronto. Well, the last figure I saw, I haven't seen it for 2024, but it was 117,000 for a single family home and development charges alone. So, again, going back to you want affordable housing, or people believe that, the housing costs are prices are so high. Well, when that starting point of new construction is so friggin' high, to just get it off the ground, it's not going to bring those prices down. And then you've got, these are also hard costs that those developers are having to pay out of pocket up front before even a shovel in the ground. And it could take years before, between when they pay those charges and when they actually offload that property. So in that period of time, they're having to cover the holding costs of that $55,000, for example. So even just factoring the interest charge on that, just at a regular interest rate over that period of time, they need to make that back. It's expensive. So you're going to have a lot of, as these costs keep going up, and this is just one segment that's up that 11 to 12%. It's, kind of also plays into all the other areas of increased costs. Developers just, it's really hard for a developer to get a shovel in the ground.
Yeah. And the development charges typically go towards public facilities, libraries, parks, recreation centers, fire, police, etc. But that's also what all of our other taxes go towards, and property taxes and taxes. All of our taxes go to these same items, so to have an upfront cost, like you said, Dave, of $60,000 for that, it's creating more roadblocks than highways. I don't know. It's just,
it's not the way it's supposed to be, is what we're trying to say.
Mm-hmm.
It's not the way it should be.
But think about how much, $60,000 per home for development charges is a huge sum of money. That is a large. It's not $5,000. Property taxes are typically, let's say 3,000 to 10,000 in Ottawa, give or take. Some are more, obviously, but to have 5 times that amount just to get a shovel in the ground is insane. It's insane. But at least we're not taxed anywhere else. At least that's the only tax that we have to pay.
That's right.
For development charges.
Imagine that. Imagine that.
It'll be interesting to have Matt on shortly to talk about it and go through that, because he's obviously, very cognizant of that cost and what the constraint is of builders, because he sees it amongst his constituents in Orleans, of builders trying to build and needing additional housing and all of that.
And if there are any other Ottawa councillors listening, we would love to have you on as well. We can have an honest, transparent,
open forum.
An open forum. It'd be great. We could just have all of the councillors. Just have a huge Zoom call.
And the mayor.
Yeah, imagine that.
Yeah, good for Matt though. That's incredible.
Yeah. How many city councillors are there? Do you know? Does anyone know?
I it's what, 13?
Yeah, I think it's somewhere in that range. We could have them all.
13.
We could do this.
Too many. We
Special episode.
We just need one king.
We have that. I got 4 mood boosts today, gentlemen. 4 of them.
Boost
I
me.
like them. Here we go. Number 1, where do fish go Did I say this already? No. Where do fish go to borrow money? To the loan shark. Loan shark. Nice guy. Number 2. What do you call an arrogant criminal falling down the stairs? Condescending.
I like that one.
Number 3. Why does Snoop Dogg always carry an umbrella? For drizzle. And last but not least, why are peppers the best at archery? Because they have an arrow. I think I might have used that one last week. I apologize, but it's still good.
Okay. Those were good. Those were actually good.
Thank you.
I am way off on that number of city councilors. It's 24. So of 24, only double, but of 24, Matt was the only one to vote against it, which is interesting. But anyways, we'll continue on.
I'd just like to hear from the people that voted for it. Like what is their thinking? Because there is obviously, no matter how flat the pancake, there's two sides, so I want to hear the other side. What is the,
I agree.
What is the vote for it? What are they hoping? Maybe it gives them more dollars in their,
what's the positive side of that to add to affordable housing? How?
Yeah. Like I wonder, I love that we're getting back into this after the mood boost. I wonder how, for everyone who leaves, I wonder how that money, like potentially the councillors literally have, like, with this new bill or whatever it is, with these new increased charges, this is how much more you're going to get for your specific community. And that's what they want, right? They want that additional, whatever it is, 100,000 a year per region so that they can further develop their neighborhoods. Like, I don't know. I'm sure you'd have to hope they have the best intentions, but I'd love to hear the other side of it and understand why they would do this, knowing there's affordability charges and everything else that goes along with that.
Yeah.
Well, let's hear it straight from at least one of the horses' mouths.
For sure. Thank you, everyone, for tuning in. And if you're looking for us, go check us out. Check out the comments. You can connect with all of us there. We'd love for you to subscribe, as Greg mentioned. Smash that button and follow us on all the socials where we have exclusive content.
I cringe just hearing that.
Smash
that button.
All right, guys. We'll see you next week, everyone. Thanks.
See you next week on Imagine That.
Deuces.
Bye.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe because we'd really like that.